All right, so today's call is about supporting home ownership in the places we call home. Here at California Bank and Trust, the Zions Bank Corp organization, we've developed a program called Affordable Home Loan Program. The program is essentially to help accommodate the Community Reinvestment Act. This was enacted in 1977. It requires that the Federal Reserve and other federal banking regulatories to encourage financial institutions to help meet the credit needs of the communities in which they do business. And this is really surrounding low and moderate income neighborhoods. Though the product itself has a couple of caveats that we've developed that helps more than that in the state of California. There's a lot of differing organizations out there that do this in regards to banks. It's really a products that you will see developed by banks. They're traditionally portfolio products, and they allow us as banks to be able to assist in the communities. And it's a regulation that we must meet. But at the same time, it actually is an excellent way for the community to be able to ascertain a loan product that helps them with first-time home buyers and the like. Now, our product, I'll go into detail about here momentarily. It's not necessarily a first-time home buyer product, but it does carry attributes to it, and there are opportunities to be able to ascertain certain credits. And so we'll go through that today and discuss that. If at any moment in time you have a question, you're welcome to just pause me real quick or just type it in the chat session, which I'll be monitoring as well. So if you have any questions, by all means, just type it up there, and I can totally answer them. You know, one of the big things about the program is we believe homeownership is still the American dream. You know, it's an opportunity for folks to find a place to live, sense of pride in their community, helps you build wealth, financial freedom. So homeownership is an opportunity for Americans to be able to scale their wealth. And, you know, it's something that we want to make sure that we have flexibilities to, and that we're partnering with folks within our community, especially realtors, nonprofit organizations. And so we do a lot of work with these organizations to be able to find folks out there that could make good use of this product. So hopefully today, as we kind of like run through this product and share with you the dynamic features of the product, you'll be able to find space in your communities that it would work well for, and you could be able to bring it to your community to help advance those efforts. Why does owning a home increase wealth? Well, you have appreciation. On average, home values grow between 3.5 to 3.8% in value per year. You know, this statistic has just been probably, if you did the last 5 years, it's a lot more than that. But just in the last 10 years, this is kind of what we've seen. The equity of a home, which is the difference between what you owe and its value, is an opportunity to call as part of your net worth and financial well-being. And so, you know, that's an opportunity where, you know, unfortunately paying rent does not do. But in all aspects of owning a home, equity is definitely a position that shows up on your balance sheet. Tax benefits, you know, interest is deductible, property taxes are deductible. If there's mortgage insurance, there's deductible. So obviously you got to confer with your CPA and or tax preparer to ensure that you can get all those benefits and to what amount, as recent legislation for federal taxation requires certain limits on those. So you definitely want to converse with your tax preparer to find out how much of that you benefit from, but definitely far further tax benefits than you would get if you were renting. Though standard itemization, you know, for federal rules is, I would say, a pretty solid amount, so it's not bad. Forced savings, you know, it's always good to have something force you to save. You know, it's you know, maybe not as accommodating as a 401k, but at the same time, forced savings, because every time you make a payment, a portion of that payment is paying down the principal of that loan, increasing your equity position. So definitely a place where it helps you increase wealth. And then the last piece, which I think is probably the most important, is when you have stability and predictability you can be able to scale your income. You could budget and for other savings. And that's important. And you're like, well, how does that differ from renting? Well, when you rent a property, your landlord can raise rents annually if you'd like to a certain percentage, depending on your municipality. But at the same time, having that predictability of what your payment is for the next 30 years, if you had a 30-year fixed mortgage, is definitely accommodating. So the stability as well, there's a heavy cost if your landlord shows up one day and says, hey, you know what, I want to, sell the property. Well, if you're renting, they'll give you proper notice and you have to leave. Well, those moving costs are definitely expensive. And if you had, let's say, if you just ran into the unfortunate situation where you had to move every year for 2-3 years, that's a considerable sum, for moving expense and so forth. So all these items are definitely items to notate of what helps you increase in wealth through home ownership. And so the product does help folks in achieving that. Now, the product itself, here's some program parameters, which is what you'll find in differs from other banks that do offer this similar product as this. We do a considerable amount of them. We probably take anywhere from 30 to 50 applications a month in the state of California to achieve that. As you can see here, the parameters are as so. Eligible products are 30-year fixed, and then you have your 15-year fixed rate as well if you wanted to be able to have a shorter term to pay off sooner. You could do it with condo, but if you had a condo up for sale that you were interested in, that could definitely work. Max term is 30 years. The max loan amount is $766,550, which is essentially your conforming rate loan amount as of today. Minimum FICO 620, which is relatively generous for these programs. And we mean it. We'll go down to 620, which is excellent. Your max LTV is 97%. You can go up to 105 if you have a second, like a community second, that's assisting you with down payment and closing costs. So that's definitely something we can look into. Now, the debt ratio on this is maxed out at 45, though we can go to 50% if you have a 720 FICO, and the automated underwriting engine does approve it, which is excellent. That's a new update for this year. There is a reserve requirement of just 2 months of your principal, interest, tax, and insurance. The loan purpose does need to be purchased, though we will allow a no cash out refinance. We have found as of recent that a lot of homeowners who purchase, with an FHA loan can really benefit in refinancing out that FHA loan with this product. And I'm going to detail the difference in payments between FHA, Fannie Mae standard program. You also have, this program, and I'm also going to show you the differentiation with Home1, and I'll explain a little bit more about that later. The property types, single family, 2-unit family dwelling is applicable. Yeah, planned unit developments and condos are definitely acceptable. We do require primary residence. Now, the eligible bars, U.S. citizen, permanent resident aliens are allowed, and we will allow it in a revocable trust. Max points and fees. This is where, if you have, IPCs as well, we'll allow that, interested party contributions. When do those come into play? Well, those come into play when you are, let's say if you're a realtor and you want to offer a portion of your commission towards closing costs, well, that would be what we call an interested party contribution. And so IPCs are allowed up to a certain percentage with most loans, but we do allow it here as well. How do you qualify to do this loan, and why is this loan important, right? So before we get too far into it, you'll notice later in this deck why this loan is actually a value add to a potential homeowner. Well, first and foremost, they do not pay the mortgage insurance. We pay it. We still receive the mortgage insurance on the loan as lender paid MI, but we don't essentially apply that to the loan in any way. Also, when we price these loans out, we actually price them out a full point better in price than the going rate on a Fannie or Freddie Mac loan. And we price that relatively aggressively. And you'll see that later on the slide when I show you the comparison view between the payments. And it'll essentially show you how much you save. Now, if you were a homeowner and or a realtor, this allows a potential homeowner to be able to get more bang for their buck in addition, or it will allow them to save that much for the price of the home that they're looking to purchase. And or if you already purchased it and you want to refinance out of that and reduce that payment, this is an excellent loan to achieve that. Now, traditionally, these loans really have to qualify based on two metrics, which is whether you're in a low to moderate income track, okay, or you yourself are a low to moderate income borrower. Now, to be a low to moderate income borrower, traditionally your income has to fall below 80% of HUD median income. And I'm going to show you here momentarily through a website what that looks like. To be in a low to moderate income track as well will have no income limit. So, these are two ways to look at that. And I'll break into that here real quick so you can see that. And then also the 80% HUD median income by household, this does still apply for that. So we'll go over that here momentarily. And I'll show you how that all applies. So we also offer closing cost assistance. This could be up to about $3,000. And as long as it's a purchase, primary residence, that you fall within all the program criteria we mentioned earlier. But the one caveat where this is required is you have to be a first-time home buyer to get the financial assistance. And you also need to make sure that you don't have an excess amount of liquidity. Essentially, we want to make sure that this assistance is going to someone who might need it. Now, that's post-closing liquidity, meaning that after your down payment, how much cash do you have left over? As long as you don't have more than 12 months PITI or $15,000 in liquid assets, then essentially you would qualify as long as you meet the other following criteria. And, this does help out. Now, the program itself, positively, we do not charge our lender fees. You'll still pay for an appraisal, title, and escrow, but you're not necessarily paying lender fees like you would with other lenders. So this product actually comes with no lender fees. And then in addition to that, we allow the $3,000 up to $3,000 in assistance if you're a first-time home buyer and you meet the criteria eligibility here. And so as you can see, $1,500 of that $3,000 is if you're 80% or less of AMI, and or $1,500 lender credit if the borrower is purchasing a home in an LMI census tract. You will receive another $1,500 if it's in a majority minority census tract. Now, I'm going to go over all of that here momentarily so that you can get a really good idea as to how do you determine all that. It's relatively simple. It's really one website that'll show you the tracks. And then this other website, which I'll pull up here momentarily. And if you notice, the URLs of those websites are down below for you to be able to look them up and identify them. But in any case, I'll show them to you so that you can have a good idea as to how that works. But once again, the positive thing here is the $3,000 in credit. All active loan programs can be applied to. We actually just added VA loans as well. So this isn't really specific to the affordable home loan program. We'll offer the closing cost assistance as long as folks meet it, even in other program criteria, which is excellent. So, and we'll once again show you how you can determine if someone was within that criteria. So household size, it's really determined by your application, and we will validate that through your tax return. Why does household size matter? Well, based on your household size, we will determine what is 80% of the HUD median income limit in that census tract. And once again, when I go to the website, I'll make a lot more sense of that. So it does help from there. So once you list who your dependents are on your application, we'll validate it there. Conditional reserves, reservation require MLO processor to request closing cost assistance. Property must be within an assessment area, and HVML is not for you. Actually, applicants must obtain homebuyer education. So for the program and closing cost assistance, the potential borrower does need to go through homebuyer education and receive a certificate within the last 12 months. The good news is the class can be done online. Freddie Mac offers this class for free. So it's just a matter of the homeowner, potential homeowner, to be able to go online and start, taking the class. So really easy to do. And really, I think for a first-time home buyer, a great intro to homeownership, learning how to budget, identify, other expenses from homeownership. So these 8-hour classes are absolutely excellent. And I would advise it even if they didn't want to take advantage of the program or closing cost assistance. It's just a great way to intro someone to all the things that go behind being a homeowner. All right, so I'm going to kind of pull up a website right now that will help us take a look at some of these items. I think first and foremost, it's understanding how to review and find census tracts. So you can very easily just put in an address. Okay, you could just use the map and use user select. That's what I'm going to do. I'm going to do it a little old school here and just kind of scroll in, and as I scroll in, it'll start pulling up the map a little bit closer. All right, just going a little bit more. So as you get closer, you start seeing all these census tracts start pulling up, So I'm going to pull up, let's go into West Covina. Okay, so here we are in West Covina. Here's a census tract here in West Covina. We'll go 4056. It's right off of Azusa and Roland. I'm going to just click into the census tract, and I'm going to hit user select. Okay, I'm going to click into the census tract. And as long as the home is within this census tract, this census demographic data holds true. Okay, now very interesting. First and foremost, what you'll notice is tract income level is upper. Okay, so once again, only low to moderate income tracts will have no income limit. Okay, so that's one caveat. There's 3 ways to take advantage of these products. Number 1 is if it said low or moderate inside this box. Okay. Number 2 is by the income itself, but we wouldn't use this side to determine income because we want to look at the average median income based on family size. So that you would do with this website here, and I'll back up here. So from this website, you click on California, you choose that county of, in this case, it'd be Los Angeles, because that's where West Covina is at. And essentially, the first thing you look at is like, well, Jared, what income limit am I using? Well, you're using 80% HUD median income limit, but you're going to use based on family size. So if it was, a husband and spouse with 2 kids, we're at 4 family size, and our median income limit is $110,950. The problem in California is with the cost of home ownership, very few people can meet that from a HUD median income limit, So when you stop and you look at it from that perspective, it is quite difficult to achieve 80% of HUD median income limit. I mean, even with a family size of 8 at $146,000, that's like purchasing maybe a $500,000 home if you have no other debts. So really difficult to achieve by that. So what we did was we said, we need a third way to help folks be able to achieve this. And what you'll see most lenders are doing today is they're looking at these tract minority percentages, okay? If you're over a 50% tract minority percentage, all right, and this tract has over 50% minorities in the tract, we will allow no income limit to purchase in the tract, okay? And this is to help drive more diversity in these tracts through not only, whether you're a minority and or to be able to help increase the wealth of that tract. And so essentially, in this way, we allow the tract minority percentage over 50%. Today, we have no income limit to achieve that. So the 3 ways, essentially, once again, to just kind of like recap, is if you have a low to moderate income tract, there's no income limit. If you're over 50% track minority percentage, no income limit. And then the other way is if it's upper and let's say this was like 30%, then your only other way of achieving it is to make sure that the household size and 80% income limit is not, your income does not go over that based on your application. Okay. And so those are the three ways to achieve this. Now, even irregardless of our product, multiple lenders have this product. And so it is really important to understand how this works because Fannie Mae and Freddie Mac also have another product, Home Possible, and so Home Possible with Freddie Mac and Home Ready with Fannie Mae. These two programs use a similar methodology but have their own websites. But once again, very difficult to achieve income qualification because they're at 80% HUD median income limit. There are just few counties in California where it really makes sense that someone can actually purchase a home and have the income at the right level to achieve it. So what we try to do to help more people achieve the HUD median income limit is by scaling it by family size. So the larger the family will allow for higher income limits at 80%. And so we hope to be able to help assist more borrowers that way. So really, I mean, from every aspect, we are trying our best to do that. And, why are these products important? Well, number one is it helps folks, be able to afford more. And helps them to be able to have a more manageable payment. And so I'm going to show you now what I wanted to do is just kind of go to Zillow and just take a look at, that census tract that we were looking at in West Covina, California, and just look at what type of homes are for sale there, and let's find out, hey, what kind of home can they purchase in that market? Not sure why my internet is so slow all of a sudden, but in any case, maybe because I'm sharing. I'm going to stop my video. Maybe that might speed it up. So we were kind of looking at over here off of Azusa. Let's see here. Where is Azusa? That's Grand Hollenbeck, I think. It should be Azusa right there, should it not? Yeah. Azusa and Roland. So right in here, let's look at what type of homes we have for sale. Not very many, to be honest with you. Wow. Let me eliminate that, just see what pops up. And let me clear all filters, reset all filters, apply. All right, so we have a condo for sale here. Really pretty condo. It looks like kind of a brand new build. Oh, that's really nice. So this condo is selling for $669,365. This would be an excellent fit for the program within that market. And anybody who's interested would be able to ascertain this loan for that. So, and we'll show you some payments for it. But, very simply, this would be an excellent property for that loan. And just to kind of put an absolute on it, I'm going to copy the address, go back to the geocoder, just paste it in, and just hit search. And there it is. So we're going to take a look at that census data. This actually, this census tract is middle, okay? So it's still not low or moderate, but it is middle. And so that's positive. And the tract minority percentage is over 50%. So the borrower would actually still qualify to use our product for this property, and it would absolutely work. And so this is an excellent example of a client who could potentially get into this property with our product. Now, well, what's the benefit, JR? I still don't see it. Okay, totally understand. And I agree. So let's take a look at it. So we kind of showed you how to find the property. We showed you how to look up the income limits and so forth. Why is it a benefit? Well, this page is really what you're looking at on your screen is what's going to actually kind of show you the benefit. So what are your options out there today if you can't meet it because your income is higher than that 80% of HUD median? Well, the other loan options that you have available with a low down payment, and very famously, FHA is just one of them. I think FHA is an excellent product. It has a higher debt to income ratio availability. And I think it's a very fair and equitable product. It's just the question is it better than what we're offering through the product that we have? And I would say probably not. If you see here, this is an example of a home purchase price of 600,000. On FHA, you're required to come in with at least 3.5% down. Okay. Now, with FHA, your loan amount, even at 3.5%, should be 579,000. But you do have a 1.75% upfront MIP that you have to pay. MIP is mortgage insurance. Don't confuse mortgage insurance with hazard insurance, okay? Mortgage insurance is an insurance you pay in case you ever default on the loan. The bank is covered on anything above 80% or higher of that valuation. Of their loan, I'm sorry. And so essentially, mortgage insurance is essentially an insurance you pay for the bank to take the risk of taking a higher loan amount against the value of your home. Hazard insurance is essentially what some would call fire insurance. Okay, so keep that in mind. Now, regarding FHA, you'll notice mortgage insurance is still required, even in excess of the upfront mortgage insurance that you pay. So that upfront mortgage insurance is essentially you're paying 1.75% right out the gate. Now, they do allow you to finance that 1.75% with your loan amount. So that's why your loan amount goes from 579 to 589, essentially a $10,000 swing that gets tacked onto your loan amount. Now, gratefully, FHA does have fair rates, I think, in the market traditionally. And because of that, it helps mitigate some of that payment hit, but you still have to pay that monthly mortgage insurance, which you see there is a payment of $265.37. All in payment difference compared to our program, you're still paying $309 more to go with FHA. Now, Fannie Mae and Freddie Mac have their own 3% down program. Now, with their program, purchase price of $600,000, you'd put 3% down. Loan amount's going to be about $582. You're going to pay mortgage insurance probably in the sum of about $276.45. You're going to be at $4,051.29 monthly payment. The differential from our program is actually in excess of about $420 because the interest rate is much higher at 6.75. So once again, it's still not more beneficial than the program and the payment we're offering. Now on our program, very simply, the rate is excellent, part out with FHA, slightly higher than Home1, which I'm going to explain Home1 in more detail here. But our affordable home mortgage program with 3% down today has a rate of 6.375. Payment with principal, interest, and mortgage insurance. We are not including in this payment taxes and insurance. That's going to swing one way or another based on where the property's at, the condition of the property, and so forth. So just please note that these payments do not include taxes and insurance. But in any case, $3,630.92 of all four of the programs that would be available for someone who's not at 80% of HUD median income. It is probably most advantageous from a payment perspective after factoring in mortgage insurance and upfront mortgage insurance. Now, looking at the Home1 3% down program, this is an excellent alternative if we just cannot get the loan to fit in the affordable home mortgage program. With this program, with Home1 3% down program, purchase price of $600,000, down payment of 3%. Your loan amount's about $582,000. Your mortgage insurance payment is about $337.46. It comes with a higher mortgage insurance for this program. It's requested that it's at 35%. So it's a little bit heavier, but keep in mind, mortgage insurance is as well deductible, tax deductible, which is really positive. All-in payment comes in about $39.20 It's about 20 bucks shy of FHA, but look at your loan amount difference. You have about $7,000 less in loan amount that you're paying. So that's good from an equity position standpoint. Your rate's relatively pretty good on the program. I've always been very encouraged by what rates come in on that program. So you're essentially a $290 differential from our program. But as you can see, with all that is out there in regards to what's available to be able to purchase this home, the affordable home mortgage program is excellent. It's an excellent way to achieve home ownership at a monthly payment that could be much more affordable than your alternative options. And once again, these programs are found with banks predominantly because banks are required to invest in the communities, and not just focus on high wealth net worth areas and making sure that we are looking to all the communities that we serve and that we offer services in. And so, great opportunity to take advantage of a product that can be able to really help out. And again, this can be used for purchases. It could be used for a rate and term refinance, meaning you can't get any cash out. And some of those rules still apply. And so excellent opportunity. Moving to the next page, I just kind of want to go in a little bit more detail about Home1 because it is a great alternative to our affordable home mortgage program. There's no borrower geographic or income limits, so you don't have to worry about whether they make so much money or they're in a certain area. This is just everywhere and anybody, but there are caveats. Custom MI coverage available with the credit fee and price. Like I said, in bullet point 6 over there, I believe is standard 35% MI coverage. You can use it for purchase and no cash out refi, so it still has the same advantages as our program. 97% 105. It has to be 1 unit properties with fixed rate financing only, accommodates various property types. You have to be over 95% LTV. That's one of the factors on this program that is different from ours. For instance, let's say you have a client who purchased a house, came into some money and wants to pay down his mortgage, but qualifies to utilize our program. They're still going to get a better deal with our program in regards to payment and rate. So, but because if they paid it down below 95%, they wouldn't be able to use Home1. So it's something to look at. One borrower must be first-time home buyer and all borrowers must occupy the residence. So I think that's really, really important. So keep that in mind. But excellent program, excellent alternative. Home1 is a Freddie Mac product and really was great that they had come out with it. It does offer it's a smaller niche, but we find that the niche works in more times than not. And it's a really good product for the real estate community to be mindful of. If you're a realtor in the market, we do offer co-branded marketing material, email and print. We do print marketing with shared costs for EDDM, every door direct mail. You can do co-branded single property websites for MLS data, open house digital check-ins as well. So if you have a listing that you're looking to be able to put on the market, knowing that it qualifies for this product just by its location, then you have an opportunity to co-brand the property at reduced payments and financing and so forth. And so we would love to partner with you to help you market that property with the product and attract more buyers. And we have a total expert as a partner with us, and we utilize their services that could be able to help assist you and be able to market that property. So really cool stuff. Absolutely love the total expert piece. And, if you're a realtor in the market, this is going to be really helpful for you. Here's some basic testimonials, and this is why we're in the business. We get these really heartfelt messages back. And, this one's saying, thank you all so much. This has been one of the most emotional experiences I've been through. I think I felt every emotion possible times 100 each day since my offer was accepted. This is starting to feel real, but I'm definitely still feeling a little disbelief that this is actually happening and I am a homeowner. Rebecca and Wendy, I cannot thank you enough for being so supportive, patient, and informative. It truly made all the difference. Thank you, Namantha. Here's a person who's probably dreamt about this more times than they can think of, and it's happening, and then it happened. And then guess what? While it happened, they can afford it. And so they're just so encouraged and so happy. And, this is why we get into the business, is to give our clients the very, very best and be able to help folks, achieve their dreams of homeownership. And so when I put this in the deck because I think it's really important for us to really level set our mindset as to, why do we want to focus on products like this. And here's another testimonial. Thank you for guiding us through this process as first-time home buyers. This has been a very smooth process, and we are very grateful for your help, knowledge, and assistance in getting us an amazing rate on the right kind of loan for our home. Can't thank you enough for helping us finance our first home purchase. Big shout out to Sharmila for tapping into her friends and family network and for trusting us to take good care of them. And to my assistant, Aaron, and our underwriter partners, Beverly Herman and Roy Schmidt. This is our loan officer sharing with us the testimonial, but also thanking our team here for executing in such a caring and diligent way, which is something we do every single day. 80% of our business is purchase business, helping clients get into their dream homes. And it is one of the funnest things to do. It's so much more fun than refinances. It's a lot stressful, but at the same time, it's fun. So if you have any questions, I don't see any in the chat, you're welcome to come off mute and ask any questions you like. And I'd be happy to stay on for a bit here to help you with that. Okay, if there's no questions, we'll go ahead and stop sharing and end today's call. Thank you so much for joining, and wish you guys a great night.